Good morning everyone and welcome back to Morning Markets from True Potential. Today I'll be reflecting on stock market performance from last Friday and overnight, then I'll be looking ahead to what we'll be watching out for this week. After a noticeable pullback in global equities on Thursday, we saw stock markets bounce back on Friday. In the UK, the FTSE 100 was up 0.4%, whilst the FTSE 250 was up 0.6%. The US markets were stronger, the S&P 500 up 0.8%, whilst the Nasdaq was up 1.2%. Europe was also up 0.5%, and overnight, Japanese equities were up 1.8%. US equities led the way last Friday, with growth stocks outperforming value, with technology and communication services amongst the leaders, whilst industrials, consumer staples and energy trailed. There was nothing specific that triggered the rebound, perhaps just a reflection that stock market prices had adjusted too much to the pickup in growth concerns surrounding the spread of the Delta variant, with some focus on reports of dampened vaccine efficacy. Looking ahead for the week, there's a whole raft of economic data being released, starting with the PMI survey data today from Europe, the UK and the US. This is a leading economic indicator which we often discuss, as it provides an up-to-date reading on how businesses are coping in the current climate and what their expectations are. The survey focuses on the manufacturing, services and construction areas of the economy. What is particularly useful is to look at the underlying components such as new orders, employment, inventories and input prices, which can tell you a lot about the directional travel for demand, inflation and general economic activity. And a reading above 50 indicates expansion, whilst below 50 contraction. In the early hours of this morning, we had data from Japan's manufacturing PMI readings came in at 52.4, so above that important 50 level, which indicates expansion, although it was slightly lower than last month's 53 level. Looking at the underlying details, overall new orders and exports orders increased, though the pace of growth was the slowest in 7 months. Firms continue to be faced with supply chain disruptions from the global semiconductor shortage, therefore constraining output. The inflation dynamics were relatively positive, with stronger increases in output prices coinciding with a deceleration in input prices, and stronger employment was also encouraging. For services, the reading was 43.5, noticeably lower than the 47.4 in the prior month, which isn't too surprising given the government has been putting increasingly tighter restrictions to contain the spread of the Delta variant. Also this week, we'll be getting German and Japanese export numbers, which is a good barometer for global demand, and we'll also get business sentiment and consumer confidence readings. Both very important, as a more optimistic outlook should see a greater willingness for businesses to expand and invest in new capital, while consumers should be more willing to consume. Towards the end of the week, we'll get US data on personal income and consumption expenditure, as well as another reading on the US labour market with the initial claims data. In the bond markets, very quiet. Here in the UK, the 10-year government bond yields trading at 52 basis points, so 1 basis point higher than Friday. In the US, the 10-year government bond, no change over the last 24 hours, trading at 1.26%. In commodity markets, slightly stronger in oil, up 1.7% over the last 24 hours, and gold also up 0.2%. In currency markets, we've seen sterling, a little bit of sterling strength since Friday. Pound trading against the US dollar at 137 and against the euro at 117. That's all for today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.